All right, everybody, what the hell are you doing? Hope you're having a great day. Welcome back to Matt Money. Today, we're going to talk about three different topics. Bitcoin, Tesla sells off 75%. We're going to talk about that. Microsoft and Google are hiring, freezing, as well as laying off some people in the Azure division, if we're talking about Microsoft. And then thirdly, Conoco and Shell are selling some of their assets in the Gulf of Mexico. So if you have several $100 million, you could be an operator in the Gulf of Mexico. So we'll hop right into talking about Tesla first. So Tesla gives up 75% of the Bitcoin stash they have. So they sold as their Q2 disclosed earnings report that they just released today, which they ended up doing pretty good. Sold 75%, which was worth about $1 billion. So that obviously comes on the back of Bitcoin doing extremely well over the past several days. Let's just pull it up really quick. So Bitcoin's been doing pretty good over the past couple days. Kind of starting to make a turn up and to the right. Who knows if it's going to continue downward? It's based off of this news. But yeah, over the past week or so, it's looked pretty good, up about 14-15% ever since, I guess. And then obviously people are starting to sell off based off of the news. So curious what you guys think about that in the comment section down below. Microsoft dips as it reportedly cuts job listings in the Azure platform. So they're cutting a number of job openings. Hiring freezes are pretty rampant right now. Not only are they cutting a lot of jobs in the crypto space, but hiring freezes are really rampant right now in Google as well as Microsoft and many other companies that I've seen in the tech industry. I've been thinking about this just based off the shakiness of the economy, and I anticipate over the next couple of days or weeks we will hear that we are officially in a recession as Q2 shows up as a negative negative GDP growth for the second quarter in a row, which currently lists as technically a recession. Is it going to be as bad as 2008? Probably not. But at the same time, I think people are just being prudent. Easy money is gone. Microsoft, Google's, and the rest of the world were able to get cheap money that was allowing them to grow as money kept getting fed back into the economy. That money is drying up. The supply is drying up. And so therefore, you kind of have to correct a little bit and retrace the amount of people, right? If you overhired by, say, a few dozen people, that obviously means you have to cut some of them, wait for trends to kind of come up and pick up to the right. Things slow down, right? And people always hire based off of things always going up and to the right. And as we've seen, going in from 2021 to 2022, things don't always go up and to the right. So let's see what's going on at Google. Google also pausing hiring for 2 weeks, apparently. Advertising its hiring slowdown, a complete pause on hiring for 2 weeks, according to the information. Company a week ago said it would slow hiring for the rest of the year. The sort of announcement has come from all its big tech company rivals facing the decelerating economy, just kind of as I mentioned. A memo to employees said that this will now become a 2 week break in hiring overall. That's interesting. I've been in hiring freezes for like months, but I guess it's a big deal for Google. We'll use this time to review headcount needs and align to a new set of prioritized staffing requests for the next 3 months, says Senior VP in the memo. The news comes in time enough for analysts to factor it into the Alphabet earnings, which are set for Tuesday after market close. Consensus expectations are for an EPS of $1.30. That just confused the crap out of me because I'm used to seeing almost $20. But since we had the 20-for-1 split, so I was just like, wait a second. I was like, that's super low. So sorry, I just have to recalibrate. But the $70 billion in $70 billion in revenue seems about right. Going next to Shell. Shell places 2 Gulf of Mexico assets up for sale. Approximately $1.5 billion is what they're trying to raise based off of selling their Auger field and their Conger field. They operate Auger at the moment, and Hess operates the Conger field. Not surprised, as these are rather old assets. Deepwater Gulf of Mexico is where I work. Auger, Conger are rather old. Shell's doing a lot of exploration right now in the Gulf of Mexico, so it makes a lot of sense for them to try to sell and be able to pay down some debts maybe, as well as put that money into renewables or put it into other fields that they're going to be developing over the next several years. As I know, they're going to bring on a facility in 2020, at least 2025, I know for sure. I think they're going to bring one online in 2024 as well. So Conoco, this isn't very surprising. Conoco's been trying to get out of deepwater Gulf of Mexico and just deepwater in general. They've already tried to exit the North Sea, so we're not unfamiliar with this. So curious to see. They are trying to sell their approximately 17% stake in Ursa in the Gulf of Mexico. Great asset. I've seen some of the production from there. Companies retained a financial advisor to sell its 16% in the Ursa Princess development, highly valued hundreds of millions of dollars, according to the report. Net production from the development is operated by Shell at approximately 13.7 MBD. That's pretty good. Yeah, it's almost 100,000 barrels of oil a day equivalent. So who knows? Maybe it's like 80,000 barrels of oil a day, and approximately the same in gas. So ConocoPhillips has been one of the smartest companies throughout COVID-induced oil crash, spending almost $20 billion on well-timed acquisitions. The value portfolio writes in a bullish analysis on Seeking Alpha. Interesting. Cool to kind of see. But I think right now, if you're trying to sell assets right now, it's a great time too, because you're going to have people, you're going to have the small mom and pops, or rather the junior oil companies kind of coming up and being like, hey, what can we pick up? And generally that's what ends up happening. You have the big oil explorers that are able to develop these large assets, and then towards the tail end of their life, they get sold to these other companies that are trying to get their last dollar. They're cheaper to operate, they're still trying to grow. Whereas these large companies are really trying to hit these big fields, find these big fields to continue to move the dial. And so, not saying Ursa is on its way out, but Auger and Conger are rather old fields. And I don't know what kind of infrastructure exploration can be done around those areas to continue to fill that facility. Who knows? Maybe they've tried and looked for future potential fields to bring back to the facilities. Don't see any. But I thought it was interesting. I've been buying Bitcoin. Go back to the first article. And so the fact that Tesla is selling it is pretty interesting. I'm curious when they did sell it, and if they're going to buy it back at all. Maybe it was just a test trial to see what's going on. I don't know. I'm kind of curious as to what they're kind of thinking in the strategy with respect to that. These continued announcements of the hiring freezes, if not layoffs, in the crypto space is enticing. I'm curious when it's going to flow over into some other sectors. I've really only seen it truly, I guess, isolated in the tech industry, and I'm curious if it's going to spill over. And if it does, it's going to bode poorly for other sectors, right? We've already seen a lot of material sectors kind of fall over on themselves. Copper and a lot of those other minerals and metals are starting to come pretty cheap. And then obviously if demand goes away because people aren't driving to work, the people have less money, they're trying to save, they're not going to be spending money on flying, and that's obviously going to drive the amount of demand for oil price down, which is good for inflation, but at the end of the day, not good for oil companies. And I think a lot of times right now, a lot of people are investing in oil. So I think it's prudent for Shell and Conoco to sell off some of these assets. They're not primary to their portfolio. They're both trying to move into a different avenue. So, yeah, I don't think it's bad. So I appreciate all these articles that were written by Seeking Alpha. If you guys are curious about joining Seek Alpha Premium, find the link in the description below. But I wanted to share those little tips with you guys and see what you guys think. All right, I'll see you guys in the next video. Cheers.